In the world, if you're able to make money when you're not working, that's what it's about. It's about residual income, and that's how you're creating wealth. My goal for the year, ideally I want to acquire a piece of property every quarter, but boy, you really can't take an emotional approach to these things. 90% of millionaires in this country, and I would say maybe across the world, 90% of them invest in real estate. You control what you buy, where you buy, and who you put in that house. Where with stocks and crypto and all that, you have zero control over any of that. They may fear getting into the market because of the higher interest rates, but that's not going away. You know, it's not that interest rates have went up, they are really at where they really should be. For sure, if you knew as a young person that you were going to be in the same location, same area, same spot for 2 years, I would definitely say you should buy and not rent. Start looking at the compound value of interest and all that in your favor. The ability to make an unlimited amount of income is very appealing, right? So the harder you work, the more money you're going to make. Unless I don't discriminate. I mean, like, you know, every day the phone rings, and if you read that one book, you would have a very good understanding of how to be successful and make $1 million selling real estate.
Hey guys, thanks for tuning in. Today I have Scott, very nice guest today. He's very experienced in the real estate industry. He's a broker owner of Keller Williams, one of the biggest real estate franchise companies in the US. He has more than 20 years of experience in the industry, and I'm sure you guys are gonna love it because he's gonna add a lot of valuable information today. By the way, thanks for coming.
Yeah, George, thanks for having me. Appreciate it.
Yeah, absolutely. Well, I'm sure you're gonna say a lot of things that they can apply and learn from you. Mm-hmm. So, do you want to introduce yourself or say something that they might want to know about you?
Yeah, sure. So Scott Pressler, again, broker owner of Keller Williams Realty here in Fort Wayne. Like George said, Keller Williams is the largest real estate company in the world, actually. And my partners and I, we own the territory of Northeast Indiana. And I've been doing real estate for actually 19 years now, so it's been a lot. I've seen a lot and done a lot. It's been an exciting time.
Okay, thank you. So let's just go ahead with the questions and moving on. So for people interested in real estate, what type of investments or paths you can pursue in this industry? Because I feel like some people think that real estate is just buying and renting houses, but there's much more than that.
Sure. So I think in the beginning, the important thing is to come up with like a strategy. And the good thing about real estate is there's so many different ways that you can make money as an investor in this business. I would say the two main components would either going a commercial route where you buy and rent out commercial property, or the residential route. And then within those realms, then there's single family homes, there's multifamilies. So multifamily would be like a duplex, triplex, quadplex, something like that. There's a segment with Airbnbs, so short-term rentals. And I have a lot of people that even here in Fort Wayne that do the Airbnbs. If you're looking for it just from a financial standpoint, on a global scale, you see people doing what are called REITs. So there's real estate investment trusts, where you would strictly invest your money, and then someone else is buying those properties. There's also vacation rentals. So maybe you're looking at something more like in Florida or California destination points where you're investing. Or you could do large apartment complexes. So you see those kind of popping up even close to the university here. So storage units would be another thing that you could invest in. So there's definitely lots of different niches within the business.
Yeah, exactly. Well, we'll talk later more about what you do specifically, but guys, if you want to start your career in this industry and know more about it, please search about all of these things that he's talked about, because as I said, it's not just buying or renting houses. Like, there's much more than you can do and make money from. So now, with respect to your career, what are some of the things you've done this year regarding, buying, selling, or renting, or whatever you did? And what's your goal for this year, 2024?
Yeah, sure. So right now I'm in the process of, I'm doing a remodeling project on one of my, it's a duplex, and the tenants that I had in there, I kind of inherited, and it definitely wasn't necessarily up to the par that I would want in terms of the quality of the unit itself. So we actually totally gutted this apartment, and actually we're just finishing up this week. So pretty excited about that. And so, I look at that like now I'll be able to increase the rents, and it'll make the property worth more money. So, in that particular case, it was a home that I bought at the right price and knew that it needed this. And finally, 2 years later, here we are kind of getting to this point. So it's exciting to, be able to freshen that up and do that. My goal for the year, ideally, I want to acquire a piece of property every quarter. I do currently have one under contract right now. And, for me, there's always this element of like, obviously I'm here to make money, but in this particular case, it's somebody that I know, and they had a financial situation. The house was in kind of disrepair. So it's kind of nice to be in a situation where I can actually go in and help somebody get out from underneath something that they can't afford to repair, and then help them kind of transition into like, their next place. So that's pretty exciting. It kind of hits home a little bit. I will say that the market is very competitive right now, and I've lost out on a couple homes that I really wanted, but boy, you really can't take an emotional approach to these things. And even though I wanted them, there was a dollar amount that I just wasn't willing to go over. And somebody, was willing to do that. And if you don't buy the property right up front, you're really setting the tone for the potential to be upside down and failure. And so I really kind of pride myself on, you really have to buy it right, and that's an important part of the process. So if I can acquire, one home every quarter, whether I keep it as a rental or I end up fixing it up, rehabbing it, and reselling it, so it'd be a combination. And each situation is just going to be different, once I locate something of interest.
Okay, yeah, correct. And so for this goal of either house flipping or just buying and renting these properties, how's the economic situation going to affect your goal? Because presidential elections, interest rates, among other global or national economic factors.
Yeah, that's a good question, and all those things definitely come into play. So when you look at like interest rates, and this is what we've seen over the last, coming up on kind of a year now, is with the rising interest rates, that lowers everybody's buying power. So that money now costs you more. So somebody that was approved at say 5% for a $200,000 house, they might not now only be able to afford $175,000. So, and then as an investor, that's same thing. It costs you more money. So you got to be conscious of making sure that the numbers work. From a political standpoint, there's two different ways that both parties kind of go about things, and I think their intent, both of them, is everybody says that they want affordable housing. It's just how do you go about that? And you'll typically see with the Democratic states, the Democratic parties in states like, let's just take California, for example. I mean, the real estate there is just, it's through the roof. It's very expensive. You have densely populated areas. You tend to have higher income people there, and it drives all those prices up. So what they try to focus on from a government standpoint is to create a situation where they've got rent controls and try to stabilize what those rents are, and things in place to help lower income buyers as well. On the flip side, with the Republicans, they kind of approach it more of a laissez-faire deal, where they'd like to kind of more hands-off, and they want to encourage more building and more growth, so that that will increase the supply, and therefore then should bring down the prices a little bit more naturally. So I don't really think there's necessarily right or wrong. I mean, I personally like the approach of just letting the market play itself out. But I think they both want to see the interest rates get to a point where there's this equilibrium. They were given the loans away before, and that is not sustainable. And everybody was getting into the market. It was creating a huge appreciations over a short period of time and driving prices up. So they wanted to kind of slow everything down. And that's what's happened here. So I think they'll just kind of try to get to an interest rate that's a happy medium there.
Yeah, correct. So, Scott, another interesting question that some people may be interested about, how do interest rates compare today versus historically?
Yeah, that's a great question, because I think we're so used to, in this current economic environment that we've been in, where the interest rates have been so low. I mean, people don't even really realize that historically the average has been more like 10, 15. And I mean, there's people, like if you talk to, like, you know, your parents and grandparents, they were paying 13, 15, 18%. So, you know, it's not that interest rates have went up. They are really at where they really should be based on a good, fair market. So they're not higher now, they're where they should be.
When were they paying 18%? You said, like,
in the
maybe like
1970s.
1970s.
Mm-hmm.
Okay,
Yeah.
okay.
Yeah.
Most people that are watching us right now, maybe between 16 and 25 years old, so they are fairly young. If you were in their shoes right now, would you buy or rent a house? Or let's say even also after college, would you buy or rent a house? Because it's true that, okay, if you buy a house, you own and the property, and you may expect that property to raise in value. But, you know, with all the people that are teleworking right now, or people that like to work this year here and then the next year in another state, or, you know, people are moving right now. So would you buy or rent a house right now?
Yeah, good question. I would say that for sure, if you knew as a young person that you were going to be in the same location, same area, same spot for 2 years, I would definitely say you should buy and not rent. You know, whenever you're renting, just keep in mind that's 100% of the money that you're paying out every month is gone forever. And, you know, if you were somewhere for 2 years, you should see a modest appreciation over those 2 years, and you're paying down a little bit of the principal. So I would argue that, you know, if you were going to relocate after a couple years, that you would, and let's just say you broke even, where, you know, maybe your rent or that payment that you made for those 2 years was like end up being free. So imagine living 2 years for free because you bought versus rented, and that money was all gone. And so then I think at that point, what I would say as a young person is, when you come, and maybe it's you got a job or something where you're going to go relocate, is then I think you need to make the decision, then do you turn that into a rental property? And my advice would be yes, because now you're creating residual income and you're making money now every month. And so if you were to move somewhere and maybe you're going to go buy another place, and then that profit that you're making off the first one can kind of go towards your second house. So you're kind of creating this domino situation. But, you know, in the world, if you're able to make money when you're not working, that's what it's about. And it's about residual income, and that's how you're creating wealth. And I'll say this, that 90% of millionaires in this country, and I would say maybe across the world, 90% of them invest in real estate. So I mean, follow what the smart, wealthy people do.
Like, 'cause I see that many people talk in social media, especially about passive income, residual income. You know, just do this and you don't have to work anymore. Do you really believe in these?
Well, I believe in tangible assets, and, you know, I've had friends over the last few years get into cryptocurrency and other things like that. And I, maybe it's just my age a little bit at this point, but I believe in a tangible asset that I can see and I can control. So I like the fact that, like, you have this tangible asset that will, you know, it's there. Someone else is making that mortgage payment. You're making money every month. You control what you buy, where you buy, and who you put in that house. Where with stocks and crypto and all that, you have zero control over any of that. And, you know, when you go and if you're looking at doing different kinds of investments, and let's just take the stock market for an example and a comparison. When you go buy $100 worth of stock, $1,000 worth of stock, $10,000 worth of stock, you're paying like that amount in full. When you buy a home, you're leveraging a bank who's providing a loan, so you only have to pay a small portion of that up front. So you're able to buy something more of value with just a portion of that overall cost And I feel that that's a great advantage over these other things that are definitely more risky.
And then another thing that I wanted to add to the podcast, can you explain how leverage works when purchasing a first-time home?
Yeah, so if you looked at, like, let's just say in the area here, based on our incomes here in Indiana and our home pricing, let's just take like a $200,000 house, just so you guys understand. I mean, you don't have to come up with like writing a check for 200 grand. You're leveraging through a mortgage the ability to acquire an asset of, in this case, 200,000, and you may be able to get into that for as low as $5,000 to $10,000. And if you're a vet, there's 100% financing, and there's USDA finance. So there's different loan types to minimize what you put into it. But let's just say you had a $10,000 down payment on a $200,000 house. I mean, think about, like, over the course of the next year or two, through appreciation, your home is now worth $210,000, $220,000. So that initial investment, now you've already got back through appreciation.
Yeah, right. Yeah, it's amazing how with $10,000 you can own a $220,000 asset. Mm-hmm. So let's say I start investing in real estate or any other financial instrument, and I'm making money with these, more than the usual or the average person in their 20s. I see that when they start making money, they start living beyond their means, maybe like buying a bigger house or renting a bigger house and spending too much money on these. In your experience or in your opinion, how much percentage of your income you would allocate to your house? Yeah,
that's a good question. So the mortgage companies typically will loan you based on like 28 to 30% of your income. So I would definitely cap like what you're spending at 30% of what your monthly income is. And just to give you kind of an example that I had kind of put together was, if you were, and this is for Indiana, if you had and the average in Indiana is a $70,000 household income. So if you broke that down and used 30% as an example, that would come out to about $1,750 a month, which here in the Fort Wayne area, that would kind of get you around, say, a $200,000 house. And again, that's going to vary depending on what the property taxes are, what the insurance is, what the utilities are. But that $1,750 could definitely include all of those things into that. And in regards to living lavishly, I think I was very frugal in my younger days, and I reinvested a lot of the money that I made. And so now as I'm a little bit older, I feel like it's time to kind of reap some of the rewards of that.
Absolutely,
and so,
absolutely.
But I've created a lifestyle, and my goal was to like create a monthly income that if I stopped working, that what do I need to live comfortably within, like, kind of what my expectations and my comfort level is. So I would encourage people to, at some point, like, what is that you feel that you would need to make per month, and use your investments as that vehicle to get to that. So whether it's we want $10,000 a month, 20, whatever it is, to live the life and fund the life that you want.
Yeah, completely. I agree with that, because I also think that if you want to buy a car or an expensive car or something that you don't really need, you need to find a financial instrument that is paying for that, rather than just earning income when you go to work and just paying for that. So, but in terms of your job right now, what are some things you look at when buying a real estate property? And who's usually your target audience or the consumer profile? Who's the person that's buying to you?
So I would say from an investment standpoint, the key for me is you really have to buy it right. That's the key. So I need to find the right property and not get too carried away that you want something and you got to pay the right price for it. And then take into consideration what are the rehab costs going to be.
I'm talking about the people that are
my clients.
Yeah, your clients
from a realtor standpoint.
Yeah,
sure.
Yeah.
Okay.
How do they look like?
So just the people that I work with or would help buy and sell?
Yeah.
Okay. So for me, I've been doing this, for such a long time that the clients that I typically work with are referred to me. And I don't necessarily, I don't want to say I don't discriminate. I mean, like, every day the phone rings. I mean, sometimes I'm doing marketing where I'm bringing in, buyers and sellers, but a lot of it, thankfully, at this point is through referral. And, it's a good mix of people that are looking to sell and or buy. And some of the reasons they're doing that, I mean, people are, if they're young, they're maybe starting a family, so they need a bigger home. Then conversely, you have elderly people that are maybe they're in a big 2-story house, their kids are moved out, and so now they just want to be in one level. Maybe they don't even want a single family home. Maybe they want a condo where they don't have to worry about mowing the grass and doing outside maintenance and things. People looking for second homes, lake homes, vacation properties. So there's a real wide swath of that. I've got a couple commercial deals going right now. Where people are selling some properties there. So it really covers the gamut. And the thing about me is I really feel like I personally treat everybody the same. And so it doesn't matter if they're just in the market for $100,000 house or a $1 million house. I treat everybody the same. And I actually prefer really, I mean, the young people who are just getting started, because I love helping them get an understanding of that process. And the elderly people who have, if they've been in a house for 50 years, I mean, that's a big thing for them to move. They typically have a very emotional attachment to something. So
I heard that you said that you teach younger people how all the process works. Because I mean, if I want to buy a house in my 20s, probably I don't know how that works. What's the process of buying a house with my girlfriend or wife or whatever. And it's good that you're saying that you're teaching me and showing me the process and the fact that I can learn from you. It's
fantastic because there's so many components to buying it, and I think it's definitely as a buyer, if you were a young person, I mean, you definitely should get hooked up with a good experienced realtor, just like you would for legal advice with an attorney or financial stuff with a banker, or having a good doctor. I mean, when you're buying or selling the most expensive asset that you typically own in your life, you wanted a trusted professional that's going to negotiate on your behalf.
Correct.
and make sure that you don't get into something that's got troubles or you overpay, or making sure that's inspected properly and all those things that go into that.
In terms of your career, what's the biggest problems, or what are the biggest problems you found during your career?
Sure. So the challenges, and this is kind of ironic because I think a lot of people want to get into this business as a realtor because of the flexibility. So it's almost like a double-edged sword, because for me it's always been challenging of when do I turn it off? Because when you're basically you live commission and paycheck to paycheck, because you don't have a salary, you're paid with a commission. So the beauty of it is that the ability to make an unlimited amount of income is very appealing, right? So the harder you work, the more money you're going to make. But it's hard for me to kind of separate that time when like you want to be with your family, or you're with your friends, or you're at a sporting event or something and the phone rings. It's always seems to happen when you're trying not to work that things happen. So the balance is always a challenge, and just laying down the framework. So when I personally am working with people, I do try to set some kind of reasonable expectations. So I'll tell them like, hey, my hours are from 8 to 8. And if something comes up earlier or later, text me. If I'm available, I'll respond. And so that seemed to have worked pretty well. And then I kind of carry that over with my clients, because over the last couple of years when the market was so busy, we would, if I had a seller and we were getting offers, people were wanting such quick responses to those offers because they knew that they'd be competing against other people. Well, I put into my listings that we wanted a minimum 24-hour notice, because it wasn't fair for my clients to be so stressed out. Like if we're getting an offer at 10 o'clock at night, I mean, maybe they have to get up at 5 in the morning. So those kind of things really helped, and you just kind of learn that as you go, as to establishing some boundaries is very important, really, in any business. But being that it's you, your phone, your computer, it's hard to shut that off. So I just think establishing boundaries is important.
The work-life balance. That's a big thing, especially with commission-based jobs.
Yes.
You've talked about commercial real estate, house flipping, buying, renting houses. What trend do you see in all these markets?
So I think the way that the market has been, it wasn't sustainable, that like just the amount of how quickly there were so many buyers, limited inventory, and that just that's just not sustainable where you're going to see 15 to 20% appreciation every year. So I think we trending towards settling down a little bit and slowing that down a little bit. So, and I'm already starting to see that. So homes where we were seeing like home prices escalating even above the listing price, now they're still selling at the listing price, and there's probably a little bit less competition, but it's still very competitive. But I would say there's definitely a little bit of an equilibrium. So there's always a trade-off, right? I mean, buyers had low interest rates, and that was driving people into the market, but they were having to pay a premium. So now the interest rates are a little bit higher and they're not having to do the premium. So they may fear getting into the market because of the higher interest rates, but that's not going away. But they can save by not having to pay this escalated price like we were before. So there's more equilibrium, and I think that trend is going to help slow things down, and it'll be just fair between buyers and sellers.
Okay, yeah, great. You're talking about the equilibrium point. Well, we're reaching the end of the podcast. Please subscribe and like the video if you want me to bring more valuable guests to the channel. And one question that I wanted to ask you, and I think it's very important. Can you tell me what's one of the books that you found more interesting or useful in your life, that you've read in your life, and that you would recommend to all these people? Yeah,
great question. So there's one book, if you're going to get into real estate as a realtor, the book, when we call it our real estate Bible, it's called The Millionaire Real Estate Agent, MREA, and it's by Gary Keller, who is the founder of Keller Williams, coincidentally. But this book is just for any realtor, and it's a whole book around utilizing systems and models to run it like a true business. And if you read that one book, you would have a very good understanding of how to be successful and make $1 million selling real estate.
Okay. Well, that's the name of the book. Write it down, and you can buy it whenever you want. Just last question.
Sure.
What advice would you give to young people that are watching us in terms of a life lesson, people that want to get started in this industry, just an advice that you would tell young people?
I remember when I was in college, and I don't know if they still do this, but setting up outside, there's these little tables where like want you to sign up for credit cards, and you'd maybe get a free t-shirt or something like that. I would just be very cautious of the credit that you're getting yourself into. And I was doing some research recently that if you carried a $5,000 credit card balance, and if you just paid the minimum every month, it would take you 40 years to pay that off. Just 5,000
years.
40 years of $5,000. So credit is not bad, but if you're establishing credit, you need to make sure that you're paying it off in a short period of time or monthly. That's how you're going to get a good credit score, which is going to set the foundation for you to have access to loans and a good credit score to be able to accomplish that. So I would definitely encourage you to make real estate part of your investment strategy. Try to stay away from these little money. You can waste so much money. So maybe instead of spending $5 every day on a Starbucks, save that $5,000 or for $5 every day. Just start small, little increments. It doesn't take a lot of money. When you start looking at the compound value of interest and all that in your favor, just put a little bit of money away every month and invest in something.
Yeah, we definitely need to be very careful. Or at least aware of where our money is going, our money allocation. Because it's true that I feel like we spend so much money in vending machines or coffee or subscriptions, that we are not even aware that we have them. And we could just save this money and invest it in real estate, or if you're interested in any other financial instrument like stocks or cryptocurrencies or any other, it doesn't matter. just use that money, because as I said, as you said, we're wasting too much money in that, and maybe we could collect like $100 or $200 a month with this wasted money. Well, thank you, Scott, for coming. It was great to have you here. I think you've gave so much information to all these people, and especially applicable information that they can use right now. So thank them, thank him to come here. And if you're not subscribed, as I said before, subscribe, like the video, and comment your opinions. And if you want me to bring any other guest to talk about any other thing that you're interested in, please comment that as well, and see you in the next one.
Thank you.